First of all, because if you look at the charts to what happened before, we're almost at that inflection point. So just hold on a little bit longer. The video last week was don't stop believing. Man, don't stop believing. You never know what's going to happen, and don't get frustrated. We're nearly at that point where we're probably going to have that breakout. And it makes sense when you look at fundamentals and the monetary markets. But also the pop this time will be a little bit bigger. So if you're prepared with silver, then that should really help you out a lot, you know, long term. And then we could do the same thing to analyze gold. And oh my God, what numbers would we see in gold? Gold's trading at what today? As we look at the gold markets, if I wanted to do that same analysis, it's down to 1936 today, but that's normal, the up and down. But when it pops, could it go to 6, 8, 10, 15,000 this time? If you analyze gold the same way as silver, we could have much higher numbers. All right.
Welcome to Gold Silver Pros.
Everybody, this is your host, Rob Kientz with goldsilverpros.com. It is Friday, November 10th, 2023. Welcome, everybody, to the program. I'm doing the Rare Friday show, and we're going to try to get this out in the early afternoon so you guys can see it before you get it into your Friday and Saturday plans. I have a very special treat from you guys. We have some very smart people in the audience, and one of the followers sent me something on silver and why, if you look at math in a certain way, we could be looking at an almost $400 silver price when this bull market is finally up in silver. I'm going to walk you through how we get there. It's some complex math, but I'm going to try to break it down into really easy bite-sized pieces for you guys to understand. Then I'm going to talk about a new beautiful piece of gold that I have in the shop and that I'll be putting online for you guys as well on the online store. And then I'm going to tell you where I'm going to be this weekend. It's going to be a trade show in Fort Worth, Texas. All of you that are in the Dallas-Fort Worth area, you want to come see me, I will have a table and I will have the gold and silver out there for you. So without further ado, let's talk about how we could get a very high silver price given math. And it's something called fractals and fractal analysis, and then looking at complex math systems. And we're going to break it down for you really easily. Before we get into it, I want to put up on the screen what a fractal is. A fractal is a never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. In other words, you could see a small something and a big something, but they're analogous to each other. They're just on a different scale. And they're often created by repeating a simple process over and over. Think about what a market is. What is a market? It is a set of inputs and outputs that repeats over and over and over. In fact, fractals are something that shows up in nature quite a bit. We see them in nature, we see them in math, and we see them in geometry. And according to the Fractal Foundation, a fractal is a never-ending pattern that repeats itself at different scales. This property is called self-similarity, meaning you could see a small something and a large something that look similar. Let's look at hurricanes, for instance. You also see this spiral pattern in galaxies, and you also see it in tiny little shelled animals as well. That spiral pattern repeats in nature, or you could see these complex web patterns repeat in nature between, you know, very small objects and very large objects. And then in math, fractals are often used to examine complex systems and to try to figure out what's going to happen. Fractals are part of the basis for examining chaos. What is chaos? Chaos is basically what happens in a complex system. A lot of times we don't know exactly what's going to happen, and fractals were part of that sort of chaos theory. If you guys watched Jurassic Park in the very first movie, the mathematician that was on the trip was talking about chaos theory and how you can't assume that if you're going to have dinosaurs, it's going to be like it was back then, because you're introducing new elements, you're introducing humans, different environments, and they had changed the genetics of the dinosaurs. So we're going to use this concept basically to describe to look at the chaos going around the commodities market, specifically with silver, and try to break it down and figure out where we're going. We're going to do that using fractals. So again, there's a lot of math in here. I'm just going to give you the very simple explanation and show it to you in pictures. And we're going to see where silver could be going. Thank you for the subscriber that sent this. I'm not going to put his name on the air because he didn't say that I could. But if he does, we'll come out later and credit him on the video. I got no problem doing that. Just wanted to keep his privacy. But after I went to his presentation this morning, he's like, holy cow, that's awesome. It's a great way to describe a complex system, what I've been trying to do in videos in a very precise and mathematical way. But don't worry, you don't have to have a math degree to understand it. I'll kind of explain the ins and outs of it to you so it makes sense. All right. So 2020 silver bull market pattern analysis using a symmetrical triangle chart pattern. That pattern in the upper right-hand corner, ascending bottom trend line, is basically called a flag pattern, and it's a very bullish pattern in market. So whenever I do technical analysis, I look for flag patterns, especially what do you call it? A tightening flag pattern, where you get two things that start wide and start to reach a point together. When they reach that point together, something usually goes up or it goes down, and it does it very powerfully. In this case, we think it's going to be up. So we're going to talk, we're going to look at fractal correlation analysis. Don't worry, I'll make that part of it easy for you. We're going to look at the chart pattern overview and how it's symmetrical. The whole point of fractals is basically you look at a mathematical equation, you keep doing it over and over again, and you get much bigger or you get much smaller, but you see symmetry, okay? And so the reason that's important is because the silver market was much smaller the last time it broke out. It's much bigger now, but we are seeing similarities, okay? And it's not a linear relationship. It doesn't mean because, you know, in 1980, in the 70s and 80s, silver popped to a certain level that we're limited to that level, because we've got a much bigger, more complex system. Now, it's probably going to look the same, but the amount of which silver is going to advance this time is much, much, much higher. And it's not linear. It's almost more exponential. It's almost as though you're multiplying and multiplying, multiplying many times over. And I'll explain that. There's a correlation between 1970s silver bull market to 2020. We're going to see how those are very similar. So all of you that are frustrated and saying, oh my God, silver's not going where it's supposed to go. Ah! If you look at the 1970s over similar timelines, we see very similar behavior. And I think that this is going to help people understand that sometimes it takes time for this to happen. But when you see that pattern repeat in a complex system, you know math is at work, and you know more than likely you're going to get a very similar response, although a much bigger response, no guarantee. But this is often very natural in markets, anything using mathematics. And I guarantee you the traders use mathematics in this market. And then we're going to talk about the 50-year cup and handle pattern that I've talked about on the show. Cup and handle is a very bullish pattern for trading anything from a stock to real estate to commodities. And that gives us sort of a cap of where we think that market could go. And we're going to talk about silver spot price projections and time frame. Now, even though this is using math, this is no sort of guarantee. It just gives us a framework to understand the market, and understand that it's gotten more complex means that the move this time is more likely to be much bigger. And we're going to use the math to explain how that works. All right. Now, this is all very busy chart, but the colors will help you here. And again, thank you to the subscriber for saying this to me. It's such a fantastic analysis. It would have taken me days to do this. Don't worry about all the data points and all the squigglies and all that stuff. What you need to know, very simple, is pattern recognition here. There is a similar pattern from here, and you guys can't see as I'm drawing on the screen, but from that arrow pointing to the left under fractal 1, and then to points 1A and 1B, that's in the red and the purple. Then there is to the one starting in April of 2016. So in other words, the market we had before, from 1994 to about 2007 or 2008, when you had that big boom in silver, it went up to $50 again, the financial crisis, is the same pattern we're seeing since 2013 to now. And what we're going to be examining in this presentation is we're about to have the breakout stage. If you look at December 2008, you saw a breakout in silver. Silver is trading around $10 and it popped to almost 50. Okay. Well, it was a little bit less than $10. It was a net of about a $45 net advance. You can see here on the screen. If you look, you see the exact same pattern forming between 2013 and now over just about the same time frame, not exactly, but also the same pattern. You see that rise up, that fall, that rise up again, and then the big boom. Okay. So in other words, we're seeing the same thing since 2013 now, about the last 10 years, that we originally saw in the 90s and in specifically 2004 leading up to 2008. Similar pattern. That's all we're saying. We're just saying it looks similar. And why we're calling these fractals are, what a fractal is, again, it's a never-ending pattern. They're infinitely complex, meaning fractals can occur no matter how complex a market gets, no matter how complex nature gets, no matter how complex the universe gets. Patterns repeat over and over. They're self-similar across different scales, meaning they look very similar. They rhyme, if you will, if you're talking music. Why do we do rhymes? Music, that's a type of fractal, okay? But they can be bigger versions of it or smaller versions of it. You can go infinitely small if you're talking about looking at the atomic or subatomic level, or they can really get really big if you're looking at the universe level, okay? So you just look for patterns that basically repeat over time. and have similar situations or fundamentals, if you will. I talk about the fundamentals all the time. And then you can use that to determine, are we going to get similar behavior? In other words, are we going to get another big pop in silver like we did between 2008 and 2011? Now we're looking at the 50-year cup and handle. Why is the 50-year cup and handle important? Well, a cup and handle pattern is basically where it goes like this. That's the cup. It went up to a high, and people got disinterested, and eventually a little bit more interest, and then it kind of waned again. People like, oh, it's going to pop, and it doesn't pop. And this is the handle part. We're just kind of, and then boom, you have the big pop up. So in other words, you have the big pop, people are disinterested, people start to get more interested because of fundamentals, but then people don't believe in the story, it sells off, or people take profits, it sells off. And then it said, wait a minute, but the fundamentals don't lie in this system. It should keep going up, i.e. the shortage in silver, the demand, the problems in the financial complex, all the reasons why we all invest in silver. And then boom, you get your big pop. It's kind of like a human pattern, if you will. People get disinterested. They kind of get interested, not sure if it's going to play out. Some people take, profits off the table, and then everybody rushes in because it becomes more apparent. The financial situation becomes more apparent. The shortages become more apparent. Why? Well, think about what I've been doing. I'm going to come on screen here for a moment, and then we'll go back to the presentation. Think about what happens in the markets. People get a story, they get interested, and then the interest kind of wanes because things take time to come to fruition. The shortages have taken years and years and years. It's not like you get a shortage like right away. And then as the financial condition gets worse, more and more people wake up. But it's not until the system is about to break that the majority of people wake up, that they say, oh my God, something's about to happen. And that's when you get, boom, the big event. The rush into, in this case, silver and gold also, because of safety, okay? The shortages become apparent. All those feedback inputs into the system, telling the system what the prices should be, becomes so obvious that even your cab drivers are buying silver. Does that make sense? But that's why it's such a pop up like that. That's human behavior. That's human behavior in just about everything, to be honest with you. So anyway, going back. So the cup and handle pattern is extremely bullish. It happens in stocks and real estate markets and all that kind of stuff. It's just a pattern that when you see it, especially over time, and the fundamentals line up with the fact that silver should be going up, and you see this pattern, that's another indication that we could see a big pop. Now, this is saying that the target may be $90 this time. Why? Because if you look at the bottom of the cup and the previous top from 50 to about 5, there's about a $45 difference. So if you go back to 50 this time as your base, when it pops, it should go that 40 plus pop. So you're looking at 90.95 at that point. In other words, you just add it back on. This is more of a linear analysis, whereas fractal is more of an exponential analysis. And the linear analysis is more than likely what's going to happen in the immediate term. When we look at fractals, when we look at complex systems, they get almost exponentially bigger. And that makes sense because the shortages in silver are more acute. Think about silver before when it popped. Last time it wasn't used as much in everything as it is now. But now we have big mining shortages every year. So that problem's grown bigger. The need for safety from the financial system has grown exponentially bigger. Think about the dollars have been printed, the yuan that have been printed, the yen that have been printed. Think about the amount of debt and derivatives in the world. All of those things are such big numbers, they're in the trillions, that our brains can't handle them. So the pop this time in safe assets or real commodity assets should go much, much higher. And especially when gold and silver are not only assets, but they've been money over time. They've been valuations of value over time that are consistent and you can use for money. Because what is money? It's carryable value. It's something you can say, here you go. Here's value. And when I get that, it's not a promise to pay. It is the payment in and of itself. All right. So moving on to the next slide. Here's the 1970 symmetrical triangle pattern. And what we're looking at symmetrical triangle, all we're looking at is that wedge pattern or that flag pattern. When you have this, when you have a wide mouth going into a skinny mouth, then on the other side, you tend to get a pop up or down. In this case, it's bullish. Why? Because fundamentals say it so, and that's almost always the way it goes in these types of markets. So it's going to go boom here, okay? And then eventually it's going to kind of come out, and then it's going to go woo, it's going to waterfall straight up. That's what you call the L shape or the hockey stick in a chart. You see that clearly here. And the other indicator, if you look in blue, it's got a little pop-up bubble saying the Dow peak. This is back in the 1970 to 80 pattern. Over about that 8 to 10 year period, you had that compression of the market saying, we're all agreeing at some point that something needs to happen, or the inflection point, which occurred in 1977, December 77, if you see it on the chart. This is the inflection point. The longs and shorts are arguing with each other. There used to be a wide range of trade. Now it's skinning down into where something's got to happen because the shorts are thinking it's going short. The longs are thinking it's going long. But at some point, reality has to kick in and that price has got to go somewhere. And it usually goes boom like that. It usually goes straight up. So that's what he's talking about. And he's talking about having 6 back and forth points. Think about a football game. Let's say one team scores a touchdown, the other scores a touchdown and a field goal. Well, the score changed. That can happen 6 times in a game before you get, the final score of the game. Maybe at the fourth quarter, one team breaks out, goes ahead by 10 points and that's it. So you're going to have 6 back and forth points. Or think about a basketball game, maybe better because the lead changes more often. You score a 3, you're up by 1. The next team scores 8 straight points and then you score 10 straight points. But eventually it gets to the point where one team's going to win, right? The long or the short, the Lakers or the Dallas Mavs. Somebody's going to win. Well, in this case, we think that the market's going to win. It's going to overwhelm the shorts and we're going to go long. But you have that 6 inflection points and you have the peak of the Dow. Why the peak of the Dow? The Dow's the industrial complex. When the industrial complex starts to fall, that's an indication that the economy is weak. Now, what have I been talking about lately on the channel? All the stock markets are turning down since July. The Dow was slightly negative. The Russell 2000, the small caps were very negative, and even the S&P and the NASDAQ were turning down. And even the recent pop of the last week and a half has not brought them back to they were in the highs of the summer. They've turned down. Now, if they turn back up, you could say, well, this pattern is broken. At least one of the indicators. But right now we have confirmation with the Dow being down and all the rest of the stock markets being down. And we have that wedge pattern in the silver market, which we'll show you in the next couple of slides. Now, here's the 2020 symmetrical triangle pattern. So this happened and culminated across, I would say, about 2013 to about 2023. And you see this wedge pattern or this flag pattern, if you will, this consolidation. The longs and shorts are battling each other, battling each other, battling each other. And you see it just get to an inflection point. And something's got to happen. The inertia, that's got to go one way or the other. It's got to pop up. It's got to pop down. Well, the indications are with the fundamentals and the charts that it's got to pop up. Why? Silver is an asset that's used a lot. It's not available. It's also a monetary asset. We have problems in the monetary system. Both sides of the coin say, baby, this thing's got to go up. No, I don't think anybody believes that silver's going to sit there and trade at 10 forever. The mine's all shut down. Okay, you're just not going to get nearly as much silver. It's going to be decremented by about a third as all the primary miners say, screw this. And that just creates a bigger shortage. And that's actually what's happening now. If you're looking at this chart, a lot of the reason that silver price is consolidating is some of the primary mines are shutting down. Think about the interview I did with Impact Silver about a week ago and how they're getting into zinc, and how First Majestic years ago went into the United States and got into gold. And silver companies are forced, and I think, who was the last one that did it? One of the big silver companies went into gold and almost went 50 gold and silver as well. And I'm not thinking of the name. But over the last 10 years, a lot of silver companies went into gold because they can't make money in silver. And what happens is that supply falls off and then the shortage conditions are realized and the monetary conditions are realized at the same time. And that's where you get pop. And that's what we're expecting. So this is a symmetrical triangle. You have the 6 change points, A, B, C, D, and E. And then F is the last one. And you have the Dow peak as well. When did the Dow peak? Well, it peaked recently. So if this pattern holds, think of it, it's a symmetrical pattern that's similar to back then, but on a bigger scale. Why? Because prices are bigger. There's been more movement, and that's called a fractal. What is a fractal? It's a repeating pattern, either a bigger or smaller repeating pattern based upon the math. And you don't have to understand the math, but just know that when you keep feeding data into the same equation over and over again, usually that means, in most cases, that means it gets infinitely bigger until you reach infinity. If you ever studied calculus, this is true. You keep adding back into that same equation and it gets bigger, bigger, bigger. And that's how all systems work. It's how nature works. It's how markets work. It's how humans work. And so we think that the number is going to be a lot bigger the next time. So if we're comparing the two charts, look at the 1970 bull market on the left and look at the bull market on the right. Here's where you had this pattern, the consolidation pattern. At the same time, you had a peak in the markets, which we're experiencing. And this subscriber is saying, well, we're at the point right before the breakout. If you look on the left, we got to that wedge pattern, boom, right there. And then it eventually went, and you had your hockey stick move up to 50. Well, this time, he says, we're almost at that point where we finished the wedge or we finished the flag, and we're about ready to have a little bit of time, and then like that. okay, seems to coincide with the shortages in the physical market, seems to coincide with the silver coming off the industrial markets because there's not enough, and seems to coincide with the people's need for real, honest money, because the money system we have now, the fiat system, is not working. And because you have both things present where you didn't have a 1970, that's why the pattern is bigger. That's why the price explosion should be bigger, because you have not only a shortage in silver, which you didn't have as much of then, but you also have a bigger financial crisis. That's why the pop in silver would be bigger. And that's when we look at fractals, it's the same pattern on a bigger scale. That's what a fractal is. You're taking an equation and you're measuring a more exponential move in something. And that math really explains how that works. So if you look at this one I'm not going to spend too much time on, but he's looking at eclipse boundaries. It basically looks at, on the left, you're looking at that wedge and then the pop and how high it could be. And he's looking at it on the right as well. We're just going to move on to the next slide and look at his target. His target is saying that the price target's between $352 silver and $385. And remember, it's not linear. Fractals describe patterns that get infinitely bigger in complex systems. Think about how complex our system is now. Many more inputs, many more outputs, much bigger issues with supply, much bigger issues with the monetary system. The pop this time's got to be bigger, but it's not linear. Fractals, when you look at them, when you look at that pattern in mathematics, and when you look at that pattern in nature, and when you look at that pattern in markets, fractals are more of an, I'm calling it exponential, is not exactly correct, but it's similar. It's not going to be linear. So for example, if silver went from 5 to 50 last time, it's not going to go from 22 to 100 this time. It's going to go from 22 to, he's saying, 350 to 380. I'm saying silver could go to 600 in my own opinion, because you look at the system and there's more people, there's less silver, there's more money, there's less silver. Okay, does that make sense? And we're dependent more on silver for our system than we ever have been before. That's why the move has to be bigger this time. And again, when you look at fractals, you go look up fractals, it's a system that's repeating that usually gets infinitely larger, with the exception of one number set, which gets infinitely smaller. And we use that to examine the world we cannot see, the world you see in a microscope, or the world you see, at the atomic level. But in markets, infinitely bigger in this case. So we think, if you think about over a really long timeline, is even going to be the final price of silver? Could we not repeat this again in another 30 or 40 or 50 years? If silver is still a very important metal, and we haven't found as much, and we haven't found substitutes, and the next monetary system is chaos, then that next chart pattern or fractal is going to be a multiplication of the one we're in now, which is a multiplication of the one that we were in the 70s and 80s. Does that make sense? So it just gets bigger, boom, bigger, boom, bigger, boom. Why? Our world gets bigger and it gets more complex, and it's not going to be linear. So if we go back to his chart, and I'm not going to explain this in detail, just look at the patterns and the price calculations on that chart and where it should end up, and that's where you get the 352, 385. I would even say as high as potentially 600 in my own sense, because I think it's going to be much bigger even than most people realize. And I think this fractal, or this version, if you will, of the market or of the matrix, is going to be much bigger than the previous one. In any case, very interesting analysis, but it uses a common math set. And fractals were discovered back when computers first came out. When we got computers and we could start doing more complex equations and feeding the equations back into themselves, then you started to notice those patterns. And when they started visually representing those mathematical equations, you started noticing patterns in nature. That's how meteorologists can predict what a hurricane's going to do. It's using that math. Okay, that's how astronomers can predict what's happening to a galaxy, because you use that math, and the shapes and the size and the way that things interact are described by that. And if you go back to chaos theory and you go back to Jurassic Park, the fact that chaos ensued and the dinosaurs got out was because things had changed and their threat became infinitely bigger in that context than it was in the one before. And I find that, a pretty interesting representation of chaos theory, or the fact that as things get infinitely more complex, they don't happen exactly the same, but they do have repeating patterns. And usually in markets, the explosion is much bigger. Therefore, I also think if you applied this to the dollar system, the implosion of the dollar system, and why it will go to zero, you can use fractals to look at that too, because it almost infinitely expanded. And now the collapse has to be, it's like a black hole into of itself. So you applied the math in the reverse way, you would get the shrinking numbers in the dollar, and then the explosion in things that really matter, like gold and silver and other things too. Eventually oil could get very expensive, other things could get very expensive. But because gold and silver have been money, that's where we're expecting to see the financial valuations get much, much higher. Anyway, I thought that was a really cool mathematical analysis. I tried to put it in words and explain it to you guys as easily as I could, but just know that there are models out there where you could look at complex systems like the silver market and get much higher numbers. And there's actual math behind it that makes sense, that mathematicians use every day to examine everything. You examine weather, you examine nature, you examine atoms and cells and chemistry and people and analysis of markets and things like that. In fact, when I was looking at fractals online, fractals are used to predict how corporations are going to grow, and there's software developed that executives and organizations can use to determine how their organization is going to grow in a complex environment. So that math is being used in many places. All right, enough about the math, but I thought that was good news for those of you who are frustrated by silver. Oh my God. First of all, because if you look at the charts to what happened before, we're almost at that inflection point. So just hold on a little bit longer. A video last week was don't stop believing. Man, don't stop believing. You never know what's going to happen, and don't get frustrated. We're nearly at that point where we're probably going to have that breakout. And it makes sense when you look at fundamentals and the monetary markets, but also the pop this time will be a little bit bigger. So if you're prepared with silver, then that should really help you out a lot, long term. And then we could do the same thing to analyze gold. And oh my God, what numbers would we see in gold? Gold's trading at what today? As we look at the gold markets, if I want to do that same analysis, it's down to 1936 today, but that's normal, the up and down. But when it pops, could it go to 6, 8, 10, 15,000 this time? If you analyze gold the same way as silver, we could have much higher numbers. All right, now on to something I just wanted to share with you guys. I'm not going to put a sale on this week. So I put a sale last week on the silvers. Freedom bars are almost out. I just have a couple left. I'll be taking those to a show this weekend. I'll probably sell out. And then I put junk or constitutional silver on sale for 17 times face. Sold so much of that basically, that kept me busy for a week. I actually got behind, and there are 3 or 4 people in which I'm not going to be able to offer to because basically I sold out. So that was a great sale for you guys. I'm glad that you took advantage of it. We're basically out of that. I just have a little bit left for the store I'm going to keep here for the local people. And we're going to back to our regular prices this week. But we did, ship a lot of that out and sell a lot of that. We sold it at the show last week. We sold in the store. I had 2 or 3 guys come in to the store and take advantage of that deal. So glad you guys took advantage of that. We got you some really cheap, silver, constitutional silver. I'm glad I was able to help you do that. Basically, I'm out of stock. So there's 4 or 5 of you have not called back. I apologize. I just don't have any left. It is always until supplies last. And so we're not going to have a sale now. Next week, I'll put a new sale on. I need to recover from the last one. I've still got some packages to mail. But thank you for everybody that participated. All right. Next to last, I wanted to show you a new piece I got at the last show, the Texas Coin Show here in Grapevine. This is an Australian coin called a nugget. It is a 1 ounce. And look how gorgeous that is. It has a little kangaroo, and it's called a little nugget. This is a neat little, for my money, the Canadian Australian mints, I think, put out the most beautiful, wide array of coins anywhere. Sorry to the US Mint, sorry to the UK Mint, sorry to all the other mints. The Canadians and Australians just have it down, man. I don't know if there's a design in either gold, silver, or either one that I just don't like. I said, what a beautiful coin. I got 2 of these. I'll put this up on the website, hopefully by this weekend, Saturday. So if you guys are interested. And lastly, I have a special announcement. I'm doing another show this weekend. This time I'm going to be at the gun show. Let me get that up on screen. We're going to be in Fort Worth at the Fort Worth Gun Show, the Lone Star Gun Show, which is going to be held at the Fort Worth. I think it's the Will Rogers. If I'm correct, I'll show you the website here if I can get it loaded. There we go. Lone Star Gun Show. Fort Worth Gun Show, November 11th through the 12th. It's at 2405 I-30. Sweet Beat. It's at the, anybody who's been to Lone Star Gun Show knows exactly where it is. It's at one of the big exhibition centers. And I will be at that one. And if you guys want to come see me, I'll have silver. I have a little bit of gold to the point at which I'm going to put some sales on just for the show. And we're going to move out a lot of our old stock, and that's going to allow us to buy some new stuff. So The cool thing about that is, one, if you want to come meet me and buy some gold and silver, you can do it there. That way I'll get over on the Fort Worth side for some of you guys that haven't driven up to Grapevine. And I believe that's Saturday and Sunday. I'll be there most of the whole time, although I'll probably leave a little early Sunday to get home. But in addition, what that's going to allow me to do is to buy some new gold and silver, some new stuff for the website. So we'll be cycling off some of that old stock that I had that I originally bought. We'll be putting some new stock on, some new items on for you guys. All right, that's going to do it for today's show. Wanted to thank the subscriber that sent me that analysis of the silver market. It uses a lot of complex math, but at the end of the day, all you have to know is patterns repeat. And in markets like this, they get bigger. And it's not linear, it's more exponential. It grows bigger because the inputs, when you feed it back in to the same system and you give it feedback, i.e. humans, things tend to kind of explode. So the numbers could be much higher silver prices. And I think that makes sense. It's not a guarantee, but perhaps it could give you guys some hope for those of you who have been sitting there wondering when the hell silver is going to break out. But look at the patterns are similar to where they were during another big breakout. Okay. So we're not that far off if that pattern holds. So just hold your powder dry. If you're in gold and silver, of course, can't tell you what to do. You know, do your own research, all that kind of stuff. But I feel as though we're getting close to a breakout, and it makes sense. And so take advantage of the silver deals I put out. Get into silver if you're interested in doing that. Come see me at the Fort Worth Gun Show. I'll be there. I'll see you guys. And until next week, this is going to do it. We'll have more content out next week. We'll have the weekly market wrap out next week. Until next time, Rob Kientz, goldsilverpros.com.